Good morning. Alright, everybody. I started the stream a couple minutes late. I do apologize, but we will get into it. Just give me one moment. Good morning. Alright, got that shared. Good morning. Good morning. Let me go ahead and close a couple things really quick. Okay, so we had some strong job data this morning from what I saw, but I want to go over it really quick. So the non-farm payrolls was at 172. Previous was at 179. Forecast was 85. Private non-farms were down compared to the previous 177,000 compared to this 120,000. The U6 unemployment rate has gone down slightly though. Interesting data. It doesn't really tell me a whole lot that the labor market's recovering, but it is a, quote unquote strong data set for the market to trade off of today, which usually strong data leads to hawkish conditions, which for the market, that usually means higher yields and selling of equities. Now, one thing we're looking at on a couple different time frames, but I just want to go ahead and mark it out. And let me change the template. But we do have this head and shoulders building here. But there's two key ranges that I really want to focus on. Is that if this is an inverse cup and handle, then so far it hasn't taken the entire bottom of the cup yet. Okay, so that's the first thing we're looking at, is that this needs to entirely take this level to count as that inverse cup. So if the market's trying to aim for that, then, that's a target we're going to be looking for. And that's at that basically 748, which of course that's very close to where our 20 mile is going to be located. 20 mile should be pulling up to about the 740, probably 746, 80-ish, 747 range today. So that does coincide with that range quite a bit. Turn off the moving averages again. Sorry, we don't have a whole lot of time, so I'm trying to very, very quickly go over this. Now, the second range that I'm looking at is that by all technicals, and I'm going to turn off the Bollingers for a second. This may not look like the top of a cup, but this cup top did complete in here. So I'm trying to get that right candle. That cup top did completed to the, bullish upside. And because we have not finished out the bottom of, some of this bearish structure, then that's telling me that potentially this could end up pulling up on the day, especially with us being already so red on the session. Um, Not that we can't continue pulling down, we definitely can. But that's something I'm looking at, is that this is looking like very bearish structure, but we're still getting higher lows. Um, which, that's a little concerning when you're trying to expect, continuation into your bearish downside. Now, that doesn't mean that the market can't, pull down very quickly, hit that level, complete this smaller inverse cup, then work on building a handle, something like that, and then pushing that level. That's more of what I'd be expecting. Um, from the, bearish perspective, is that they would come, close that cup, form somewhat of a head and shoulders here, pull down, close the cup, build liquidity, make it look like for people that they're going to, have a market bounce, and then continue to the downside. Now, the VVIX is going to be very important today, and also the HIG, which right now the HIG doesn't matter until open. Um, the pre-market value on HIG is not really too indicative of what's going to be happening. So that's what we're looking for. Either we're going to have the breakdown, or we're going to find support and start closing some of these cups to the upside. Today is not a good day to start day trading with a smaller portfolio. Um, Market sells can be very, very profitable, but you have to know really what you're doing. Um, with that said, we're still going to be sitting here setting up some 0DT trades. And if there's something that I see that, is fairly lower risk, then there's no reason not to engage on it. Um, but sell-offs can be a little tricky. Um, they're not just a straight shot to the downside. So currently the pre-market's at 752.40, which for our moving averages, we have 2 minutes till open, so I'll very quickly go over this. But for our moving averages, that puts us right back at the 10 mile. Now, we've been kind of having this pattern where we tested the 5 mile, had a rejection down to the 10 mile. Now at the 10 mile, um, or excuse me, had a rejection down to the 10 mile, pulled back up to the 5 mile, kind of retested that level, potentially rejecting it again, and now we're back to the 10 mile, which that all fits very well within how the moving averages work. Remember we talk about how the 5 mile, and when I'm saying the 5 mile here, this is the daily 5 mile, is usually tested in between each and every single level. So we had 5 mile, 10 mile, 5 mile, 10 mile again. So we need to contend with this 10 mile range, which that really puts the range of the day within the 10 mile itself, around that 751 all the way to the 755. Okay, because that's the upper bounds of the 10 mile, upper bounds of the or lower bounds of the 10 mile, being that $1 to $2 above and below the level. So we're contending with that, and until we have a major break from this range, basically from, yeah, my square decided to delete on me, but basically from there all the way down to about there. Okay. So potentially with this lower Bollinger Push here, this could be a quality call buying opportunity, but we're not going to engage on anything just yet. We're going to be looking over what's going on with our symbols, our other symbols, and so far the VVIX is currently at 85.75. I don't know if that just hasn't updated on my end yet. But we do have the HIG pulling down quite a bit from the, yesterday's close to today's open. It is down from 79.88 all the way to the 79.65. So if we continue seeing the HIG selling, then that's going to be very indicative that the market's going to continue selling. However, if HIG decides to build support, then that's going to be, a very telling signal that we could potentially be heading to the upside. So we'll be watching that very closely. VVIX is at the 87.71, so it is pulled up a little bit. Now it's still in a fairly low range, even with all the equity selling going on. Technically, I would have already expected this to pull up very close to this $90 range. So this is still somewhat of a signal that potentially the market could be aiming to buy upward. HIG seeing a little buying, and semiconductors are starting to see some buying as well. Now, semis definitely have more of a bearish structure, but even here, we still have to complete this inverse cup all the way down before this is truly a very, very bearish structure. We do have this inverse cup right here, have the handle, and the breakdown. So could there be more to this selling? Absolutely. But so far I'm seeing some signals that we could be buying upward. HIG, we want to make sure basically is staying at this level and starting to buy. That's going to be very, very crucial. And our volatility is actually dropping back down again. It did pull all the way to the 87.72. It's at 87.04. So there's some signals that are really coming in that potentially we could really be buying up this overnight selling that's occurring. Because of that, and this is just going to be me, I'm not saying everybody should be copying this or anything, but I do want some of these 745 calls going. Okay, so I'm gonna go ahead and take those literally right this moment. But I want some of those calls going, just in case we're starting to actually get our upside. And to the downside, I do want to wait a little bit until we either hit this 20 ma. Oops, let me do horizontal ray, which is currently at the 752.97. So when we do get to that range, I will be taking some puts to the downside. It will be some of these 749 puts. So basically that's going to set my level for, I have calls for the 745, and then I'll have puts for the 749. So that's going to put me in a fairly safe positioning for the day. Now, not that I'm wanting to sit on this contract all day, I'm just saying that that will put me in a position to where if we're going to get our breakout, then we're basically going to be heading back all the way to this, very likely the 755, 758, something like that. So the calls would be pushed well above. Okay, probably that cup right there. So we'd be able to find major profits there. And if we broke down even further, then these puts would cover our downside, which our downside targets, again, let me hide the Bollingers, are quite large on the day. So if the selling's going to pick up, then those puts will be catching that weight. If we decide to start, ravenously buying up the day, then the calls are going to catch it. But I want to go ahead and look at the HIG again. And with the HIG here, we are pushed down to the lower Bollinger on the 5-minute time frame. Well, we did in the open. The HIG is currently buying up a little bit here. 1-minute time frame, you can see that buying just barely starting. But that is some form of buying, okay? And usually big institutions don't want to be touching HIG if they're not seeing the upside. And our volatility is still rather low today. It's at 87.37. So really not a whole lot of signals in here telling me that dealers are, fully anticipating some massive downside just yet. This is kind of like yesterday where we're seeing a lot of signals where potentially they could buy the the day upward. We're starting to see buying in HIG. SPY pushing down to the slower Bollinger. So I will very, very slightly add to my calls here. And that's when we actually push the lower Bollinger. So that's at 751.53. So we still have like another 30 cents to go before we really push that range. Okay, I went ahead and took those additional calls. And again, I already do have some puts set up for the downside. So if we continue trending down, I'm okay with that. These puts will catch. But with us seeing potentially, signals that they're maybe starting to buy this upside, I want to ensure that I have something prepared for that. HIG at the 79.65. So a little bit of continued selling in here. Might be seeing this inverse cup closing, which would be suggestive of continued selling within the equities. VVIX pulling upward as well, so 87.61. So if we continue seeing this pull upward, that will be telling us that dealers are hedging for the downside. And let's see if they go ahead and close this gap on us or not. Sorry, I have not had time to look at the chat. The 755 calls, sorry, not the 745, excuse me, 755 calls, okay. Um, And I meant 754, not 755. 754 calls. So I'm just gonna go ahead and label that. Of course, it has the smallest text ever. Just give me 1 second. Okay, 754 calls. And these were the 749 puts. Okay, so that's creating a very safe range on the day. Either we will break down and travel to that put range, or we will pull up and, you know, see the buying that potentially can start to happen. Um, Hig did complete that inverse cup, so potentially we see a slight pull upward for the handle and continue downward if we're going to see, downward continuation within the Hig. Volatility is not exactly looking super strong. We do have a small cup and handle formed at the 1 minute time frame. But I still would be expecting dealers to be putting a lot more funds into this right now if they were really expecting too much further downside. Yeah, no, I don't want to buy a call that's basically like $6 in the money right now. No, whole point is to take very, very fairly priced stuff and to run it at the money slash in the money. So we're gonna see if we get this gap right here filled to the downside. Because again, if we do fill that downside gap, I'm gonna delete some of these other random structures right now we don't need. But if we get this gap filled to the downside, then this will be starting to close this large inverse cup. Okay, we're not too far away from that. We technically only need another dollar to the downside to accomplish this. So if there's going to be major bearish structure, that's going to be the first signal, um, of the day. Well, I mean, not the first signal. There's plenty of signals that there's selling going on, but this will be the first, you know, very, very solid bearish structure if we get that full downside. If we don't get that downside, then that will not be a bearish structure. Um, that will be playing into this potential cup and handle, even though the cup, um, if this is a cup handle, then this is pulled down very aggressively, but it hasn't invalidated that cup yet. So until it invalidates this cup, um, this is not that full bearish structure that we're looking for. Now, VVIX is pulling up slightly. It's at the 88.09. So the low of the day was at the 87.03. I thought it was this 85.39, but that just didn't update properly at the open. Um, but it basically did gap upward towards that 87.03. So as long as we continue climbing within the VVIX, that is telling us that dealers are hedging downward positions. And we're seeing a continuation of the selling in HIG. So that inverse cup and handle on the 1 minute time frame did play out. So continued selling in HIG is telling us that, they are expecting to sell equities further. Now, I want to see semis here. Semis still have the same kind of gap that SPY has. We would need to pull down basically to the 563, which isn't out of the question right now. For semiconductors, that's only $7 downside. And we're getting very close to hitting the bottom of this gap here. Which once we do hit the bottom of that gap, even though this is bearish structure, I will be taking calls at the bottom of that. Entire reason is because with that inverse cup, I do expect the handle to the upside before continuing downward. Now I'm not going to be taking profit on my 749 puts here. You definitely can if you set up both those positions like I did. There's definitely room to do so once they push this gap, but that's not what I'm looking for here. I'm looking for the bottom of this gap to basically be hit, taking calls to the upside, cashing out on that premium, and then securing, a very, very solid additional put entry into the rest of the day. Now we are looking again all the way for the 749.80 before we really enter. So I'm going to be patient for that. Any way to turn my mic volume up? Unfortunately, not right this moment. I would have to mess with a whole bunch of settings right now that could mess with a bunch of other stuff. I don't really have an easy way to just turn up the gain on the mic right now. But I did move it a lot closer to my face, so hopefully that helps. So when we push this bottom range here, which we got very close to, but I'm still looking for there's that range. So these are going to be the 752 calls, and I'm also going to be very lightly adding to the 754s. Okay, so I'm going to go ahead and enter right now. Now from this range, with the bottom of this inverse cup, we're looking for the exit around this 20 mile range. Now the 20 mile on the 5-minute time frame is currently at the 752.51. I'm going to mark this in purple so we don't just have a bunch of arrows going out everywhere. So I'm going to make a note. Okay, so that's the plan on the exit for these calls. Is that with this 20 mile range, currently it's at the 752.52. That means that I'm going to be setting my market conditional order to about 752.47 currently. So that means once we pull upward, once we hit that range, the market will automatically, do a market sale on basically 80% of my contracts. If we have room for runners to the upside, then those few runners will continue running. But if not, if we're going to have a downside rejection from that range, then that's where I'm going to be looking for potentially adding on some additional puts into the day. So that's what I'm looking for currently. Now I want to go back to the VVIX here, and it is still pulling upward, so it's at 88.57. Now we can pull up all the way to the excuse me, the 5-minute upper Bollinger. However, I do expect it to kind of calm down a little bit to give us that range on the SPY to build that handle to the upside. Because now that we have closed this very large inverse cup, we expect, sorry I can't talk right now, I still have pneumonia, but we would start expecting to have bullish structure at the bottom. Okay, and again, the bullish structure at the bottom is to build that handle to continue heading downward. So that's why we're in calls, even though the day is very bearish. But the whole point of these calls is collect this upside premium and to be able to set up additional puts on the day. Now I want to look at the HIG. HIG did sell down to the 79.62, currently at 79.63. So if we see a little bit of further buying in this, that will be indicative of wanting to create that handle to the downside. Now semiconductors can push this gap prior, but so far we are starting to see a little bit of buying from that range. I'm not selling the put, no. If you have, I believe, 2,000 in your portfolio, then you no longer have the day trade restrictions. But yeah, basically we're taking bullish positions for a bearish reason. I know that sounds a little backwards, but these bullish positions are to set up better bearish puts on the day. Because again, at this first entry here, I took both puts and calls. Okay, remember I took the 754 calls and the 749 puts at that moment. Um, so my 749 puts are doing absolutely great. But with this structure being completed, that's telling me that very likely we're trying to push down further on the day. And that further push downward usually is going to need some liquidity to do so, because nothing in the market's going to be, a straight elevator to one target or the other. Usually you have to build the liquidity. So that's why I'm taking calls. So basically they're like bearish calls, if that makes sense. And we do need to move our market conditional order down very slightly. So we did have it set to the 752.47. We need to set it to 752.27. We're going to be exiting pretty much all the calls when we hit this 20 mile range. Again, 80% of the positions need to be exited at that range. Because with that bearish structure, that's telling us that we're very likely not going to be seeing, all the way up and closing this cup or anything to the upside. So we're just targeting the 20 mile for the exit. At that 20 mile, we will slightly add to the additional puts we already currently have. And if we push up further, we will have a few of those calls running to catch that additional room. The upper Bollinger will be pulling downward. So if we get that push to the upper Bollinger, that would create a very, very, very quality put entry to the downside on the day. So that's kind of the whole thesis of the day, is that we're pulling upward to pull downward further. Are we hanging on to the Starbucks calls? Um, I want to see what's going on with Starbucks. Starbucks has really been tripping me up because yesterday we had that massive sell-off when the structure was looking actually pretty bullish. So that broke down. But it's not completely out of the woods yet. You know, technically it's actually seeing quite a bit of buying today. And we still have plenty of time on the contracts. So if this buying holds, you know, if we could start reclaiming some of this lost ground, then those contracts are going to be looking good. Um, but not too focused on those right this second. Now, I want to see the VVIX here. It did pull the way to the 88.70. It is currently at the 88.58, so pulling down very slightly. Yeah, starting to pull down very slightly, which that's kind of what we're looking for. You know, we want this to pull down to tell us that, you know, those calls will work out. And the HIG is still selling pretty aggressively. Now, on the 1 minute time frame here, we do see how it's pushing very hard into the lower Bollinger. Starting to do that once again. But from the lower Bollinger, that's when you can get, you know, usually that's when we take the positions to the upside. So even with the HIG selling downward, it has been tapering away from the lower Bollinger on multiple time frames. Which doesn't exactly mean a whole lot yet. I mean, we have to actually see the price action within the SPY. So basically just waiting for this upside move. And if we're not going to get the upside move, and if we're going to continue breaking downward, then that's why we're continuing to hold these puts. We do have a small inverse cup formed here, which could potentially pull us down even further. Sorry about that. I need to drink something really quick. I'm not worried about the open calls right now either. Um, Again, everything has plenty of time in it, so with this market selling, let's kind of get through the day, and then we can navigate those positions. Excuse me, those positions at a little different time. But let's check open. I mean, really not too much to worry about here. Still very much holding into our bullish structure. Again, we did close this smaller cup here. And from that smaller cup, we can pull downward to form a handle. So I'm not worried about open. Open looks fine. Remember, some of these smaller contracts will be trending downward until, you know, that buying or selling actually hits. But we do have a, you know, a great success rate with a lot of these smaller contracts, um, you know, pulling to at the money slash in the money. So I'm not very concerned about that right this moment. I wouldn't be adding um to any of those positions right this moment. Um, especially with the weekend. Um, I think it's better to, for the moment anyway, just kind of let some of this stuff ride out through the weekend, and we'll see how it goes come Monday. Yeah, the SMCI puts are starting to do really nice. People were originally knocking me about that, saying that target was so out of range, but a lot of these a lot of these targets have been hitting price. Excuse me. Starbucks is doing really nice today, which is always welcoming. Now, I'm not going to be continuing to add to calls here, um, because either we're going to take out this entire purple range that we discussed earlier in the day, and if we do, I need to go on the 30-minute time frame for this one. If we take out this larger structure, then it'll kind of be the exact same thesis that we just had on the smaller structure, is that from the bottom of that structure, we do usually expect bullish structure. And so, if we pull all the way down to complete this lower structure here, then that's when I'll add some calls. But currently, very happy just writing my puts and, having the calls that I do have. They're very cheap. Not really worried about them in the current moment because somewhere today there should be an upside reprieve, whether it was at that range that we discussed, or if we pull all the way down to that gap and then start to bounce. Excuse me. So kind of just hanging on to my positions here. Just going to be very patient. Now I'm going to delete this yellow level because we did close that. Give me 1 second. Okay, I'm back. Sorry about that. Reply is doing bad, same with Elf. Again, I'm really not too worried about those smaller contracts right now. Within those watch lists that we have been taking and the contracts we have been taking, not all of them run, um, but the majority do, and the majority do hit their targets very well. Excuse me. So I'm not going to overstress every symbol right this moment, especially when a lot of those contracts do have time duration in them. Um, I know everybody kind of stresses out when a contract doesn't go, you know, isn't running in their favor, but those contracts do have plenty of time in them. And either those levels are going to hit or those contracts aren't going to do well. That's the duality of how those smaller contracts work. They either run very hard or they don't. But you have to give them time. Not every trade is going to happen, immediately the moment you buy the contract. Excuse me. It's kind of like Mark, for example. The day before we took those Mark contracts, I had them watch listed, and I was wanting to take them the day before, and they were actually trending downward that day, very hard against us. I think they pulled all the way from the 52 towards like the 30 something. Um, but now those contracts are nearly in the money. Those contracts are worth over $100 per. They're doing very, very well. We had the same kind of issue with Oklo, is that Oklo was struggling a little bit at first, and then all of a sudden it decided to run all the way in the money within a single session. We saw that also out of Hims, where Hims was pulling down, and it decided to basically take the entire weight of that contract um, within a session and a half. So you either have to trust the trades or you don't, you know? Um, Not every single one of those are going to work out, but when they do, they work out very well. You have two calls. Is that calls for spy or for what? The spy calls I'm holding. Um, Again, we're kind of pushing low towards the low of the day. Um, that's not exactly when I want to sell my calls. There will be some upside reprieve, even from a bearish perspective. We should be seeing some upside. Okay, with some of these gaps that have been closed, we should be seeing some upside. That's for structural reasons, that's for liquidity reasons. There's a lot of different reasons why we should see that upside bounce. Okay, so no, I'm not selling my calls. I can't suggest anybody to do the same either. Um, Again, this is kind of the conditions where I add calls and you know, continue looking for that upside. Yeah, of course. When you do get to the 20 mile, that's when we sell and try to leave a runner just in case. Um, I always suggest trying to leave a runner, but if you only have two contracts, it might be a good opportunity just to take the profit when we do pull up to that range. Now the HIG did pull down all the way to the 79.56. It's currently at the 79.60, so a little bit of buying. Now I want to look at gold because yes, gold has been absolutely getting destroyed, but I don't exactly dislike it either. I would wait to add to it. Let's see if we get another lower Bollinger push here, which would bring us probably to about that 43.30 range. Okay, so that's what I would wait to add. But let's see if we get that lower Bollinger. I can't talk today, I apologize. Let's see if we get that lower Bollinger or not. Sorry, I've still been dealing with this pneumonia. I'm actually going to the doctor in about 3 hours. Semis are starting to see a little bit of a bounce here. They pulled down all the way to the 564. Did not completely close that gap yet, but currently pulling up to the 50 or 571, almost 572. So we'll see if we get continuation within that. The VVIX pulled up to the 88.94 and is currently at the 88.53. So starting to pull down a little bit. We are starting to get this upside bounce. So for a market conditional order, we do need to move it down slightly. So we need to set that to 751.43. Okay. So I'm just gonna mark that. Okay. CO stands for the, market conditional order. And from that range, okay. So that's kind of the goal of what we're trying to do today. Pull up to that 20 mile, take some profits on the calls. From the profits on the calls, be able to add to those put positions because either we're going to basically continue breaking down on the session, or we will pull up. I just can't talk today, I apologize. Or we'll pull up, um, create a larger handle on this cup to be able to take even better puts to the downside. Okay, so that's kind of the setup that we're looking for here. But I'm going to delete these two arrows until we hit that range. Okay, let me go ahead and look at everything. Sorry, it's just kind of hard to breathe right now. It's really hard to stream when I have pneumonia, but it's fine. The HIG pulling upward. We're seeing actually quite a lot of share buys kicking in here. Starting to see a little bit of bullish structure on the 1 minute time frame. So this is telling us we should be expecting a little bit of reprieve within the selling. It did pull down to the 79.56, currently at the 79.62. And within our VVIX, it was at again, the 88.94, and it is now pulling down to the 88.48. So starting to get a little bit of that reprieve as well. SPY is building a little bit of micro bearish structure, or a little bit of micro bullish structure here, excuse me. So we do have this small cup and handle forming. That should break us out to the uh, 20 mile on the 5 minute time frame. Thank you, I appreciate it. Yeah, I'm gonna take a drink of something really quick because I feel like my throat's gonna give out on me if I don't. So just 1 minute, everybody. Apologize for that. Okay, so we're starting to see a little bit of our upside here. We might need to move our market conditional order down very slightly, but I do want to give it a few seconds before we decide to do that. VVIX is pulling down quite a bit, so it's at 88.21. And we should be seeing the HIG buying upward. So the HIG is still at the 79.62. So we should be getting our upside push here. The SOXA 6.50 DT is very, very cheap. Any chance those go in the money today? Um, I think I would, if you're going to aim for that bearish position, be very safe and just take the six strike calls when we get to that 20 on the SPY. I think that'd be the way to set that up. PVIX still pulling downward. And I want to look at QQQ here. All these symbols are all sharing this very exact same thing where they have not fully closed the bottom of these basically massive inverse cups. QQQ seeing some upside. Reprieve though should trend back up to that 728.60. Semiconductors can pull to this 20 mon and basically reject and force a rejection throughout the rest of the market. So we will be looking at that very closely. That range is, going to occur basically any moment now. Still like our market conditional order at the 751.43. We are starting to see our 20 ma pulling back upward a little bit. Alright, this is looking good. It's looking very good for our call exit here. Let's go ahead and be safe and take this down to the 39. So make sure you change those market conditional orders to the 751.39. Potentially there's more runway on these calls, but with today being overall very bearish, we do want to make sure we secure profit rather than, have some form of rejection and basically lose all the premium on those calls. Let's see if we get our level. We did have the 5 mod trend downward a little bit here. So we do need to watch this fairly closely. I think I'm okay with moving the marking conditional order down a little bit further. Let's move it down to the 25. QQQ is still telling us we have some room to the upside. The only thing I'm kind of concerned about here is that semiconductors can potentially reject at this range. Which, if semis do reject at that range, then that'll, pretty much reject us on the SPY and QQQ. VVIX still pulling downward at the 88.13. And let's check our HIG. It's at the 79.60, so pulling down slightly. It was all the way up to the 79.63. And we can be forming a little bit of a cup here. Same with semiconductors. I would really expect them to try to grab that range though. So we'll see if they continue rejecting that or not. Kind of same with QQQ here as well. We're starting to pull down in the HIG, which is, always concerning. So 79.58. Gonna be a bit frustrated if they decided to knock FSR exit here by a few cents. VVIX did have a little bit of a pull upward, so it went from the 88.13 or basically 88.10 to the 88.38. Now it's back to the 88.34. So I don't know if this is just a, a small bit of selling within these handles on these potential cups, or if we're truly, trying to fully reject this range yet. Semiconductors are really kind of the big key here. Yeah, you're very welcome, John. So the VVIX is currently kind of just holding that same level still, that 88.37, while this is all going on. And I want to make sure I'm watching semis at the same time. So semis did pull down to the 572.59, currently at the 573.50. So potentially this could just be a small handle before filling up the upside, or potentially we could be really breaking down here. With that 20 mile on the 5-minute time frame, having that potential rejection to the downside could be a very, very, very bad signal. Volatility holding strong. Yep, semi starting to really start to slip a little bit. And this is kind of why I'm continuing to hold the puts throughout the day. Um, Even though we're expecting a little bit of bullish structure for bearish reasons, um, I kind of just don't like to mess with sell-offs in terms of being just one-sided in my contracts. Um, there's usually pretty large reactions to both the upside and downside during these selling days, so I want to make sure that my downside is hedged pretty much throughout the entirety of the session. Semi still breaking down. Which should also mean that we should be seeing the HIG breaking down here. HIG is currently at the 79.58. It did pull to the 79.56. So we'll see if we get a leg down here or not. BVIX starting to trend upward just a little bit. Just give me 1 second to take a drink really quick. I would say within the current moment, very likely they didn't give us this call exit that we wanted, just based off of the structure and everything. However, I will be taking additional calls at the bottom of this, this purple channel, because that will be the very large inverse cup. And at the very bottom of this very large inverse cup, we should be seeing a much larger handle to the upside. So if we don't get our call exit very soon here, that'll kind of be what I'll be looking for additional calls to the upside. Really kind of all rides on what semiconductors want to do here. If semis want to fully break down and take out this range, then that's going to absolutely pull the rest of the market down with it. If they want to find a little bit of a reprieve with this cup here, potentially a handle, then that's what we're going to be looking for. So still a little too soon to decide, because again, we still have plenty of room to the downside within semis today. So if that range is going to take, then I really do expect them to try to push it fairly soon here. Basically invalidate this cup and, push that structure to the downside. If not, then we have these cup and handles. So have to wait a little bit to see. VVIX was pulling up. It did pull up all the way to the 88.48. It's currently at the 88.28. So potentially that was that handle on those cups. I'm still in Uber, but I haven't checked it this morning. Let's see what's going on. So Uber looks really gross, but on the daily time frame, it's still holding its structure for the breakout. So as much as I dislike the price action in it currently, it's still worth the hold for me. Now we can be getting these cups and handles forming, which if that's the case, then that will give us our, very ideal exit here. If I could talk today, it's so hard to talk. Sorry about that. Okay, semis. Let's see what's going on here. Either we're going to push up here, basically close this cup all the way to the upside, or we will, continue seeing this breakdown. Now we are starting to see the volatility pull back quite a bit. It's actually at 87.97. Excuse me. Remember again, it was all the way at the 88.40 something. So a little bit of a fairly large leg downward, which that should be very positive for our calls. Now our market orders are still set to or the market conditional orders are still set to the 751.25. I still really like that range. You can be responsible and set it below the actual 20 mo, but that's not what I'm gonna do. This is just purely me. So if you want to take profit on that prior to that, then that's absolutely up to you. But I am looking for this 751.25. And this handle's starting to look really good. But we do have to contend with that on the 1 minute time frame. This can turn into a head and shoulders. Which if that's the case, it would be taking us downward. So we'll be watching for that. Those that are holding calls with me, really, really, really be watching this range here. Okay. Now we are seeing semis pulling back upward, which again, that's a very good signal. That's exactly what we need to see for those calls. And our volatility is pulling down very, very heavily right now. It's at 87.72. And we're starting to see a little bit of buying out of the HIG as well, so it's at 79.61. Was all the way down to that 79 56. So if this is the buying we're looking for, we're starting to get a lot of signals of it. Now what I personally want to see is I want to see this Head and Shoulders invalidated. If that does occur, then that's going to be, a very, very bullish signal in our selling day. So again, at this range, if you're holding calls, um, really, really, really potentially, use this range to exit some of those calls. I'm not going to because I'm stubborn. Okay. Um, and I want further upside on my calls. But the 20 mile on the 5-minute time frame is at the 750.81. Okay. Again, we've been kind of rejecting that range all morning. So now that we're getting very close to potentially having a very nice exit at that level, I would definitely try to use it. I am expecting semis to close this cup to the 577.67. And if that's the case, then that makes a very nice cup and handle on the 1-minute time frame, which should basically break us back up to the 751. But I just don't want people not being able to have their exit. Um, we're seeing the VVIX get absolutely blasted right now. Um, it is at the 87.40. Again, just not even 10 minutes ago, this was at the 88.40. So this has dropped an entire dollar. It's a very positive sign for expecting further upside. And our HIG still being a little stubborn. It's at the 79.60. Yep, I'm still in the SPY puts and I'm still going to be holding them because the very likelihood of the day is that dealers are trying to get to the bottom of this purple channel. It's kind of what I'm seeing anyway, is that very likely we're trying to build liquidity in here to form a large inverse handle on the inverse cup we built earlier. At that inverse, or at the bottom of that inverse cup, we did expect bullish structure. So from that bullish structure, potentially forming a handle to the downside, and from that downside handle, that'd give us basically like the 747, 50-ish range on the day. So that's really what I'm looking for. Semis have not closed this cup, which that can turn into a bearish thing if they decide not to very quickly go and take that level. One moment. Sorry about that. Okay, let's see. Do you see the SPY hitting 754? Um, that's a very, very long stretch. Remember when I took these calls this morning? We were at the basically the 752 range, the high 751. And I also took the puts this morning too. The 749s at that same time. Now, we have been seeing a pretty large breakdown within the day. Um, so I do think that's kind of outside of the reason of what we should be anticipating today. Especially when we've been seeing, a lot of selling signals going on. We see the HIG continuing to struggle to pull its weight. Um, this is a very, very major indicator on the day that a continuation within the selling is very likely going to occur. Um, just the fact that we're not seeing the type of buying out of HIG that potentially we're trying to see out of SPY and everything right now. Um, you know, that's not the best signal for me. So I do think that the overall goal of the day from the dealers are to pulse downward towards that 747 range rather than head upward. And likely any of this upside is just liquidity to continue heading downward. Yeah, if you want to be really safe on the day, just wait for a really good put entry. Um, you know, basically at the 20 mile on the 5-minute time frame, those will be decent puts. It would be better if we could get all the way to the upper Bollinger, but that's kind of a very, very far shot from where we're at right now. Hold on, I can't talk. Give me a second. Apologize, it's so hard for me to talk today. We did see the VVIX pull down to the 87.37. It's currently back up to the 87.50, so a little bit of, dealer weight going into that again. Now, I do want to look at semis. So either, again, we're going to see this breakdown to the bottom of the channel, or bottom of the structure, excuse me, or we're going to see some support reclaimed in here and basically form that cup to the upside. It's really hard to look to the upside today, though, when the HIG has just been continuing to fight us. Technically, we could still bounce here, though. That's why I'm kind of hesitant to, you know, suggest puts just yet. if you haven't already taken some. Because potentially here we're getting ready to bounce within semis, which if we do bounce within semis, that's going to take us all the way to the 578 on, semiconductors. And that would very likely take us all the way back up towards, that 751 range on SPY. Seeing a little bit of an uptick in VVIX though. So if we are expecting that upside, we do need to be seeing this starting to pull downward. But still very low on the day. I mean, again, we were almost up to the 89 point at one point today. Higgs seeing a little bit of upward buying, just a few cents, but that still matters. So if we can start forming some support in here, then that would be very good for that upside bounce. But we need to actually see support and not just continued selling. Again, kind of the entire goal of the day here is not to really like chase calls to the upside. It's to be able to get some upside to set up some really nice puts. Now, we originally set some puts up around that 751.80 range, which they're doing very nicely. They're the 749 puts, so basically at the money currently. Um, but we're trying to see some upside reprieve to set up additional puts. Semi's starting to break down a little bit further. Still has not invalidated this bullish structure just yet, but this can turn into a double top. And if that's the case, then we would be expecting the inverse cup to the downside here, basically taking us to the 569.27. That's if we, don't have that upward bounce. Wish I could make this so that I would follow the actual 20 mile throughout this session, but now the VVIX here, still trending upward a little bit. It's at the 87.72. Starting to see that potential breakdown within semis. No change in the conditional order for me just yet. I want to see structural moves rather than just the 20 mil move. Let's see, I'm mistaking calls and puts. Is it a good time now? Currently we're kind of in between, whether we're going to see a breakdown in the day or a major breakout. So if we had the breakdown, then of course taking the puts would be very ideal. But if we have the breakout, then that's not going to be the best for the puts. And again, the whole concept of today is to secure puts to the downside because it's very likely we're heading to that 740, 750-ish range. So being able to find the structure um, to be able to take those puts is kind of the whole idea of the day. So far, not really the best put range, but if we're going to, obviously continue breaking down, then it would be. But with semis here, again, we can very, very potentially have this upward breakout. We still have this cup built here. From that cup, this could be a very wonky looking handle. And even though we identify this potential double top, this can actually be forming a double bottom. I know people are going to say, no, that's not a double bottom. It's, not equal. But we do see a lot of double bottoms like this where we have the lower low and then we have a higher low. And then that kind of creates that stair step into the breakout. Apologies, it's so hard for me to talk today. Smaller little bullish cup here, potentially form a little handle and then head upward. Semis are really looking good for that upside breakout though. And the VVIX is at 8764. Yeah, basically we're just waiting for whether semis decide to break out or break down. If we have the upward breakout, then we'll be able to, take those calls out, set up some better puts, and be, very well positioned within the day. So that's why I'm watching semis really closely right now. It's looking really promising for that upside breakout, which, again, if we do get that, then that will give us the upside breakout within SPY. Basically take us to that level that we're looking for. From that level, we could then try to wait for additional bullish structure because we do have the cup, the handle, um, that'd be alluding to, a pretty large push to the upside. Um, so assuming we do get that upside breakout, um, I will be exiting about 80% of those calls at that probably 751.10 range. Excuse me, 751.10 range, which is slightly above this larger cup here. Um, I'll leave some runners to run if we're going to catch further upside. And then at that point, we'll just be trying to look for a very solid put entry for the rest of the day. Excuse me. Now I want to look at the HIG because the HIG has still not been giving us any signals that it wants to buy to the upside. Um, it's still been just hovering in that range, excuse me. I'm looking for a fairly large pull down in the VVIX to tell us that, we are going to be seeing these upside breakouts. Looks very promising though. Also have a smaller inverse head and shoulders built there too on semis, which again that's just further structure telling us that we should be hitting this 577.80 range. Just waiting on semiconductors. And we are starting to get that pull downward in the VVIX. So it just was at that 8760. It's currently at the 8748. So our upside breakout here is looking very positive. We have a lot of bullish structure within the 1 minute and 5 minute time frame. We're just watching this momentarily. Sorry I'm not talking a whole lot right now. It's very hard to just kind of breathe today. Really not feeling too great from my pneumonia. Where's semis? Still just looking for this upside breakout. Okay, so we're gonna watch this really quick, but I'm gonna say bye to my daughter. So I will be muted just for a couple minutes. But that's what we're looking for. We're looking for this upside breakout. The conditional order needs to be set to basically the top of this cup. So I'm going to make a note of that. Let me see if I can move that out of the way a little bit. Okay, there we go. So that's kind of the plan right now. And from the top of that cup, assuming we get it, we would be expecting a slight downside into further upside. Okay. So that's what we're looking at currently. Anyway, let me go say bye to my daughter really quick and I'll be right back, everybody. Thank you for being patient with me while I'm sick and whatnot. Sorry, I'm back, everybody. I had to tell my daughter bye. Okay, so what do we got here? We have a breakdown of our structure a little bit. Let's check semis. Semis breaking down, closing this inverse cup, very likely. Trying to get everybody into puts here today. My puts from earlier are doing really, really nicely. Um, but they have not made this easy to continue adding to those puts. So we were looking for an upside breakout, okay, and the reason why is on multiple different time frames we closed this smaller inverse cup here, which if that's the case, then we have this larger inverse cup to contend with. From the bottom of this inverse cup, we were looking for some bullish structure to basically form a handle on that cup to continue pushing to the downside. However, they haven't really been wanting to give us that handle. Um, we have a very, very small one forming here technically, which can take us all the way to that 748.23, which from that handle, that should be taking us down to the low of the day, which we're expecting to be around that. Basically that 740, 750 range. So the whole thesis was is that we were looking for an additional put entry after the first puts we've taken here. We did take some calls. Um, they have not been profitable. I was looking for a much larger handle to the upside today than what was right here. So, with that said, the next target should really be expecting to close this inverse cup to the downside. From closing that inverse cup to the downside, we will then be contending with this much larger inverse cup, which is all the way at that 747.27. And from that range, kind of the same thesis applies. Looking for bullish structure at the bottom of this inverse cup to build a handle to continue heading down on the day. Or, not just within the day, but to continue heading down from this range. So that's kind of the thesis. Hasn't been working out very, very greatly this morning. We did have a couple call exits in here, but we missed them very, very slightly. For example, at this range, we were very close to a call exit that we missed. I talked about using this range to exit calls, and that I personally wouldn't be because I'm stubborn, but that's, my own volition. I did say that people should be trying to use that range to exit calls potentially. We had another move right here with a call exit, and from that call exit, starting to have the breakdown. So it's been a more difficult day. I'm trying to find a really good opportunity to set up puts other than, what we set up this morning. So yeah, I mean, if we're going to be continuing to head down, if we're going to complete this inverse cup to the downside, then, adding puts would be a very wise decision. Our volatility has been giving us a little bit of mixed signals here though. It was at the 88.94. It's currently at the 87.78. Did pull down all the way to the 87.30, but that's still not super elevated, and technically we're still in a very safe volatility range. But the big one today has really just been that HIG has just been continuing to sell. Um, I think out of all the signals today, HIG's the one kind of telling us the real story, that there hasn't been a lot of upside reprieve to be had. Um, we've basically just been continuing to sell. Now with semis, we did complete this inverse cup, which is telling me that very likely we're going to try to aim for this additional inverse cup, which is at the 564.20. So essentially currently my calls are a hedge to the put positions, because the put positions are doing very, very, very well. The calls today have been fairly cheap. So once we do reach the bottom of this inverse cup here, I once again will try to very likely tag on some calls. But I do want to see if we start breaking down towards this bottom range of this purple box here. Because ideally I would really like us to just push this range already, hit the bottom of that very large inverse cup, and from there we could really start looking to the upside for some calls. Because at the bottom of that very large inverse cup, we should expect some bullish structure to start building. So that's kind of the plan for that. Now, when we get to the bottom here, I will be taking profit on a large chunk of the 749 puts that I took earlier today, as they're going to be very, very profitable at that point. And with that being the bottom of an inverse cup, especially a very large inverse cup, um, that's kind of telling me that that's very likely where the road, ends in the current moment. So I am looking for that breakdown to occur. Now our mark calls are almost in the money. Um, they're only $1.50 away from hitting that 124 strike. Which again, we got those calls really cheap. And our SMCI puts are starting to near in the money. We still have full $4 downside to go on that, but those are very likely going to hit. So we're just looking for this push to the downside. Excuse me. should coincide with semis pushing to the 6 or the 564. We talked about these Soxs calls earlier, taking those Soxs calls being very, very profitable because we were at the, I think, 590-ish range when we did discuss those calls. Because someone asked me about the 650 calls. But those should be doing very, very good. Volatility starting to pull back upward. It's at 88.14. So this is coinciding very much so with, getting that pull downward, hitting the bottom of that range we're looking for. So again, when we do hit the bottom of this channel, or the bottom of this inverse cup, I will be taking profits on a large majority of my 749 puts, and I will be trying to add some calls here. Now these calls are still going to be those 752 calls. Okay. Um, so we'll just kind of outline. So basically that's the plan with that. And I'll also write Alright, so that's kind of the plan here. Waiting for the breakdown. We'll sell the majority of my 749 puts at the bottom of that range. We'll be looking for bullish structure. From that bullish structure, again, we're going to be looking for a handle for the very large inverse cup that, this is a multi-day cup and handle base or inverse cup. So, there could be potentially quite a lot of upside. Now, on the daily time frame, we are starting to near the 20 MA, okay? And the market has been long overdue for a 20 MA retest. Technically, the last time we were at this level was April 8th. So this has been long overdue, roughly a month and a half overdue. So we could be aiming to claim that level for today, which on our 5-minute time frame here, that would start pulling us towards the bottom of this channel. It'd pull us even lower than that technically. So there's a lot of room in puts, and the whole goal is to really be able to set up some really nice puts today. It's because of a lot of different reasons. I mean, Broadcom might have been kind of the catalyst, but just the foreign markets have been needing to sell for an extremely long time, um, especially out of Japan. They've been needing to do an intervention on the yen for, months and months now. They were actually starting to do that in February prior to the conflict starting. And the conflict essentially had them, excuse me, the conflict essentially made it so that they had to put all those plans on hold. And because of that, um, they've been really just waiting for, the opportunity to start really selling off and taking profit on some of this stuff to be able to, um, prop the yen back up. I bet today, if I look at FXY, it's going to be up, but we'll see. Nope, it's actually down on the day, so they haven't started buying into the yen just yet. What's going on with the dollar today? Dollar very elevated. This makes a lot of sense because the yields are very elevated. But along with what's going on with the foreign market selling, we did have a, quote unquote hot data set from the labor market, which that's going to cause the yields to rise. And with the yields rising, the dollar rises, and that usually does push equities into a selling standpoint rather than, continuing to buy upward. So between all those different conditions, the market needing the 20-mile retest, foreign market selling, whatever happened with Broadcom, a lot of different reasons why this is all culminating into a selling day. Now we are about to hit this range. Okay, and again, this is at the, I'll get this very clearly. Is at the 747.27. Okay. So that's what I'm going to be looking for to the downside. But from that 747, 27, we're going to take a large profit on the puts here, which are doing very, very nicely. They've completely outweighed the calls that I've taken on the day. And we will be trying to position into a few calls to the upside. So waiting for our level here. And again, from the bottom of this very large inverse cup, we should be expecting some bullish upside. It won't happen immediately. It's probably going to take a little bit to build the structure to do so. But the whole thesis of that is from that upside, whatever we get today, we will be able to position into an additional set of, um, puts to the downside to really claim this full 20-mile level. It's okay. It's okay if you bought a little bit more calls than puts. Um, Again, I don't think that we're entirely done with seeing upside today. Um, Especially once we do hit the bottom of this inverse cup here, that really kind of just unlocks the market to start buying up to the upside. So don't feel too terrible if you over position calls. instead of the puts. Again, these type of selling days can be very, very tricky. Um, and if you guys did not grab the puts with me at this earlier entry, then there was really not a whole lot of room on puts today. You could have taken some of these puts at towards this 20 mile range. Um, we talked about that, but we never really pushed into that 20 mile. We had a very slight touch right there, but it rejected almost immediately. We almost had a touch right there, which this was the range we were originally looking for to exit calls and add more puts, but they rejected that by like 20, 30 cents. Um, so it's been a little difficult. It's been a little difficult to position today. So don't feel bad if this trading session isn't going the best for you. Okay. Um, just try to navigate it the best that we can, you know. We just have to continue moving forward. So, going to use this exit to exit puts once we get down to the bottom of that range, which I will be very patient and wait for that range. We're, we're so close to that range that it's almost a certainty at this point that we're going to close that cup to the downside. Um, and then from there, we can look to start building some bullish structure to the upside. So, not entering calls yet. Not taking profit on the puts just yet. Um, Waiting for this full downside. Yeah, those success calls should be doing really, really nicely. For the success calls, um, basically you're looking to close this cup here. So the 622-ish range is ideally when I would try to start trying to exit those success calls. And again, that's only for the 0DT ones. That's not if, we have something set up for next week or anything. So just being very patient for our level. No, don't go into the calls just yet. Just wait for this level to really hit before we engage on those calls. Everyone says open keeps selling today, but let's see how bad of the selling it is. So it's actually still not too bad here. And the reason why, yes, we're selling, that's guaranteed. But we still have this bullish cup, okay? And this bullish cup has not been invalidated. We still need to pull down all the way to the lower range of this $4 to really invalidate that cup. So we have a lot of way to go. I mean, we'd have to be like almost negative 14% on the day, something like that, to hit that range. Can that happen? Absolutely, but so far it hasn't, and because it hasn't, um, we're not going to panic sell positions. Do apologize. It's been hard for me to talk and everything, and I randomly cut out when I talk right now. My pneumonia's been really bad, but it's starting to get better in its own way. I'm gonna be going to the doctor in like an hour and a half here, so hopefully for next week I'll be a lot better. Now we're just being very patient for our level. Semis have not hit that level yet either, so we still have, a little bit of further downside. Fully expect that level to hit based off of, what's going on with the volatility, what's going on with the HIG. Um, Everything's kind of telling us that we should hit that level. Just waiting for our level. Waiting for our continued breakdown to the downside. Alright, so we're starting to get our downside here. Again, my target's really at that 747.27 range. If we get to that 747, like 30, 40, then I'll just go ahead and, you know, start cutting those puts there and working on getting into some of these calls to the upside. These puts have massively paid out today, though. Um, they were not super expensive this morning when we took them. Even against the hedged calls, I'm still doing very well on the day. Basically, I'm looking for a push below this range to really start signifying that we're going to be building that bullish structure. So no reason to really rush this level or anything else. It's okay though. That's just a part of learning the market. It takes a lot of time to really, navigate this stuff. Um, and even as an experienced trader, there's days where I make mistakes where, for example, like today, um, we did have some call exit exits that we could have taken. I personally didn't take them because I was being biased towards seeing further upside. Was that a mistake? Yeah, absolutely. Could have easily made, a few extra $100 on the day by taking those calls on that exit, but it happens. Um, Everything's easier in hindsight. Also, I'm starting to take profit on my puts, so those are absolutely kicking butt right now. Nice. Okay, so I'm gonna start looking into some of these 752 calls to the upside. Now they're super, super cheap, so not really expecting a whole lot out of them. Um, if we could pull up even to the 750 range today, then that's going to be profit on those calls. But I am slightly starting to add to these calls. Now, I do want to see a push into this basically yellow range here um, to really give us that entry. So being very patient here, but I do want to engage on these calls. So my 747.27 hit. Lower Bollinger is currently at the 747.27, so we're within that range to start taking these calls. So I'm going to go ahead, take some of these 752 calls. And again, the whole reason why we're taking these calls is basically for bearish reasons. We're expecting further downside on the day, but because we've closed this large inverse cup, that now kind of tapers out where the edge of the road is. Um, and because of that, I want calls to the upside. If we're going to continue breaking down on the day, then we could start targeting this 743, but that's not really what I'm expecting out of the day. And I do have some put runners just in case. But that's exactly that range that we're looking for those calls. So going to stick to the plan. Going to delete that purple box now that we've taken that level out. And I'm just going to drag our note to the side here. Alright, so that's the plan, everybody. Everybody should have taken some very quality profit on the puts from earlier. Basically these puts up here did very nice. Rode those all the way down towards that 747.30 range. This call entry could have been okay, but we did not manage it properly. So I'm gonna mark that as a miss. And now from this range, we're looking for additional calls to the upside to build a handle on this very large inverse cut. I love to hear that, Tommel. Fantastic word. So the calls that I'm buying are the 752 calls. Okay, they're very cheap. My entry on them was $15 per, so 0.15. literally only down $1 each on these calls currently. But the upside's very large today now. We're at our 20 ma on the daily time frame. And with us being at the 20 ma, can we see the market push under this level? Absolutely. But what I usually expect is, again, kind of going over the moving averages. We went from the 5 ma, 10 ma, 5 ma, 10 ma, to the 20 ma. Now we're expecting kind of some of that upward 5 ma consolidation. Now, obviously, that's not going to happen all in a single session. It can. We've seen that happen before. We've seen 20 ma tests where it's only tested the level for like 30 minutes and then bounced, and we didn't see that level for another whole month. Um, but we're not seeing those signals today. Those are not the type of conditions we're currently dealing with. But we are at the 20 ma on the daily time frame. We've closed our inverse cup to the downside, and so we should be expecting a little bit of reprieve here. Just from multiple different technical standpoints, is that we should be expecting a little bit of reprieve, even if we're very, very bearish right now, which I'm fairly bearish right now, based on what we've been seeing today. I still fully expect some upside here. Okay. That's why I'm saying these calls that we're taking are kind of like bearish positioned calls. Um, we're expecting upside for bearish reasons. We expect the upside to grab more liquidity to continue downward. So that's kind of the plan. Now, we're also going to set up some other positions once we get the upside today. Not currently, but once we get the upside today. And I'm going to mark those out on the screen, but I want to very quickly just dig through some contracts before I fully mention those. So I'm going to make a note that if we see the upside, which basically is right at that 750 range, and what's the date next week, the 12th? All right, so I really like those positions for next week. Now, I know some of you might say, why not target the 6.5 calls for June 12th instead of the 6 calls? Um, I'd rather have these be in the money right now, and we are expecting these to pull down slightly before our entry. So we should be very close to that 6 strike regardless. You can take the 6.5 strikes if you really want to, but these are the ones that I'm really looking for. So we're looking for bullish structure to the upside to build further bearish structure downward. Thank you, everybody. Thank you for the kind words. I know it's been kind of hard over the last few weeks. I've been dealing with this really bad pneumonia. Um, I've been really trying hard to get us into good positions. Some of these runner positions, like those mark calls and stuff like that, um, they're not the easiest positions to find. It takes me quite a lot of time to go through those watch lists every single night and then really determine if those type of trades are quality or not. Now, I know not every single one of those trades have lined up and hit so far, um, but so far I believe we have 7 or 8 symbols out of those two lists that have ran in the money, which is actually very, very incredible so far, seeing how most of those contracts are out until June 18th or July 17th. Um, so basically a whole nother 2 weeks to a month on many of those positions. So don't rush them, even if we're seeing some downside or upside against those calls or puts. Um, really give them the time they need because those trades are set up for a reason. Okay. And there's a very good quality history showing that, a lot of these contracts that we do set up run in the money very well. So really give them the time that they need. Um, Jin, I know you're down on the day a little bit. It's okay. Um, and I know it's easy for me to say it's okay when it's someone else's money, right? But I'm saying that from the aspect of I started from nothing. I started literally from the bottom. Um, I've had positions do very well. I've been down, you know, literally thousands and thousands and thousands of dollars. At one point last year, I was heavily, heavily, heavily shorting semiconductors, and I was doing this while I was, dealing with massive fatigue, and it's the fatigue where I couldn't get out of bed or anything. Um, I know most of you weren't following me at that time, but I was struggling very, very, greatly with a physical condition, and I really shouldn't have been taking the heavy positions that I should have been at that time. Um, I was shorting super heavy into semiconductors, and then we had the Oracle earnings, which Oracle got whatever it was, like 300 billion or 500 billion overnight. Um, I was down over $100,000 at that time. Okay. It's not easy to recover from that, but currently I'm quite positive on the year, even making up from those losses from last year. And so I say this from someone who's been in your shoes, you know. I really have been. I did not, have the training from any professional traders or anything to learn what I've learned. So I know what it's like to have a smaller account and burn money. It's a terrible feeling. Um, but we will get you through it, okay? That's the whole plan. The whole point of this is that um, we're going to teach you the skills eventually how to be able to trade and navigate this stuff on your own, where you're able to consistently pull profits even if trades don't work in your favor. Kind of like today, kind of like those calls that I took today. They're absolutely in the doghouse right now. But I don't really care because I made an absolute, massive, massive profit on those puts. So we will get you to that point where you're navigating these things very, very comfortably, but it's going to take time. Yep, yep, I know. Many people took those positions with me. Um, those November leaps on Success got absolutely destroyed. I mean, they opened up the next day, I think, at like basically $0. They weren't even recoverable at that point. What's my stop on Uber? Um, so Uber, I'm looking more for the structure. Okay, and let's just kind of go over that really quick. So structurally, we still have bullish structure here, and it doesn't look very convincing, but it still exists enough to where I'm not cutting positions. Now, I don't want to draw. Yeah, I do. I'm just going to go ahead and draw. Let's just delete these drawings and we'll just start fresh here. So, lower Bollinger moves. Okay, and this is on the daily time frame. Lower Bollingers generally lead to very large buying. Not always the case. For example, right here, you can see how we had to push even further into that lower Bollinger to really kick up the buying. However, historically, within not just Uber, but almost every single symbol, lower Bollinger movement creates upside buying conditions. So that's the first thing, is that on the daily time frame, within our technicals, we see that lower Bollinger moves generally lead to upside breakouts. Okay, so that's the first thing. Second thing here is that we still very much so have an inverse head and shoulders. That's still holding very strong. This has not been invalidated over here or anything else. This has not formed an inverse cup to the downside. So far, this hasn't invalidated any of the, potential good quality bullish structure that we are seeing. Okay. Now, with this bullish structure, we have a cup, we have a handle. Now, within this handle, this is where we start seeing a little bit of this bearishness. Okay. From that handle, with the breakout, we then head downward. Now, with heading downward, potentially, we have this inverse cup here. So we're stuck between two different ranges on Uber, where we do have a bearish structure here, but we still have this bullish structure that hasn't been invalidated. Okay, and this bullish structure won't be invalidated until we hit basically that 68.51, okay, or 68.46, excuse me. So until that occurs, we're still just in between two major structures. We still have this inverse cup very much at play, and we still have this bullish cup at play, because even though this looks very ugly, that can still turn into a handle to the upside. Because, again, the cup has not been invalidated yet. So that's why I'm saying we need a little bit more time to really fully determine what's going on with Uber. Because either we're going to push down into the lower Bollinger again, invalidate some of this bullish structure, but even then, create some of those conditions to potentially have that upside bounce, or we're going to start finding some real buying in here. And from that real buying, that will close that larger cup here, which will invalidate this bearish inverse cup. So hopefully that makes sense with Uber, why I'm not setting a stop loss yet. We have multiple different conditions that are telling us that the potential for a breakout is very real. And because of that, I don't want to just exit positions. Yes, they did take the calls. Yeah, Jin, we'll be able to get you back, and that's the thing is save up a few hundred, over the next few weeks. Just sit here and paper trade, okay? Um, you can do everything that we're doing on screen, literally step by step with us, but just use paper trade. Um, you know, I know a lot of people rag on people that do that, but you do have to learn these skills somehow, okay? And paper trading contracts and acting like it's a real portfolio. So a lot of people make this mistake with paper trade is that they'll go put the limit to say like $10,000, $20,000, $100,000, and then start just, having killer trades off of that. That's not how you do it, okay? If you're expecting to have a portfolio with basically $500 of starting cash, then you need to be paper trading with about $250. Okay, you need to be making it very difficult on yourself with those paper trades because you need to be able to step into that real portfolio with some confidence and some real knowledge of what you're doing. Okay, so I highly, highly suggest um, don't just wait to build a portfolio up again, but paper trade and follow what we do. Continue learning these skills and once you step into your real portfolio, that's going to help you just massively. I am going to be using the 5 minute 20 mall to sell these calls to the upside, yes. So if we can get to the 748.52, then that's exactly what I'm going to be looking for. Can't really put the arrows down. I have to make the text a little smaller. 1 second. Let's do that. And let's do that. Okay. And I'm going to pull that down there and drag this arrow up there to kind of show that that's what we've been looking for. Now, currently, we're simply just looking for the 20 mall on the 5 minute time frame. 20 mall currently is at the 748.51. So that's what we look for. Yeah, Lorenz, that's what I'm seeing too, is that we did hit the daily 20 mile here, and that's why I really am expecting some bullishness to start building in here. I really do expect some bullish structure to start forming, which technically we're actually starting to see some. Starting to see a little bit of inverse head and shoulders, which is starting to form a cup. Okay, so potentially we could be seeing that bullish structure that we're looking for at the bottom of this larger inverse cup. But we are 20 mile testing currently. Um, with that said, that means that we still can see a whole roughly $2 downside from this level. Because with each moving average, we expect the upper bounds and the lower bounds. So with it being at the 746.75, that basically means that we should be expecting the 748.75 and the 744.75 if we're going to fully be testing this level, which is why I really want to try to get some of this upside so that we can have some very, very quality puts to continue riding into, next week, the rest of the day, whatever it is. So currently we're just waiting. Now, let's go ahead and look at the VVIX here and let's look at the HIG. So you see, remember I talked about this morning how I really expect the VVIX to be shooting upward. Um, this is a lot more like it. What we had this morning right here wasn't cutting it. This was showing, yes, there was some hedging, but not a whole lot. This, however, is telling us very clearly that yes, dealers are hedging for the downside. Um, you know, potentially, I mean, not potentially, but we had the low of the day on VVIX at the 83.03, and now it's currently at 90.68, heading towards that 91 range. So that's kind of the movement that I've really been expecting out of the volatility. And this is really just telling us that dealers are hedging for that downside. And the VVIX2 finally broke that essentially that 79.58 range and finally broke down to the downside a little bit further, which that should be heading towards that 79.44. So there's still quite a lot of downside today. Now I do still have some of these put runners, but I'm very likely going to just take profit extremely soon here. We did see this potential bullish structure invalidated, and we know it's invalidated because this candle broke out below that structure. So potentially they're really going to try to aim for this 744 today. Now I want to see the VVIX if it's still climbing during this. Yep, it is absolutely soaring right now. So we literally just talked about this a second ago, how it was at 90 something. Now it's almost at 92. So this is telling us very, very strongly that dealers are hedging the downside currently. Now I want to go ahead and take profit on the rest of my puts here. That might be a mistake, but we will see. So let me go ahead and get these sold. Those puts ran very, very hard today. Okay, so from this range, I'm just waiting for kind of additional structure at this point. Went ahead and sold those puts. We're seeing VVIX just breaking out very, very high, but it's at this range where it likes to reject a lot. Um, Not that I'm expecting it to reject here, but every time we have pulled up to this range so far, it has led to a downward rejection. Now, I'm still just holding my calls that I took at this original spot right here. I'm not adding into these calls. I'm not doing anything fancy. I'm just going to let them play out. If we're going to get our upside, then we will find profit in them. If not, then that's okay too. Um, but I don't want to continue fighting the day with just continuing to take calls. Um, especially when we're seeing very large selling signals. We have the HIG breaking down. We have our volatility just constantly pushing up. It's at the 92.27 currently. I mean, just, you know, not even 10 minutes ago it was at 90 something. So yeah, not the signal we want to see to be fighting, trying to fight calls into this. Now I do have to get ready to go to a doctor's appointment pretty soon, everybody. So even though I would like to stay to, identify that upside bounce, I don't I don't think I'm gonna have time to do that. Um, with that said, if there is any final questions for today, moving into the weekend, right now would be a perfect time to ask. If not, then I will see you all either in Sunday's video or in Monday's stream. Now, again, I will be starting to teach classes in the afternoon starting next week. That will be at 8 p.m. Eastern Standard Time, Tuesday and Wednesday evenings. I have to do it at that time because for me that's like 5 p.m. Um, I can't really do it earlier than that in the day because I have to take care of my daughter and whatnot. So those VODs will be posted into, the learning section and everything. And again, not to self-promote or anything, but that will be included in the $29.99 a month membership. Um, but other than that, the standard morning streams and everything will still, you know, continue as usual. Thank you, Losden. I appreciate it. Do you think the calls from the 743 level? I think that's super reasonable. If they decide to take out this entire next structure, which they absolutely can, they absolutely can do, um, then that would be a good opportunity. And at that point, I might even try to aim some calls into next week. But ideally, I would like to see a pull upward sometime today so that we can actually position some of these additional contracts into next week, load up additional puts for the day, things like that. But so far, they have not given us a very, very prime opportunity to do so. See, this is the type of selling we should have been seeing all morning. This would have been a lot easier to navigate compared to what we have been seeing. Um, we're seeing the VVIX continue to push very, very strongly to the upside. Those SOX 6 calls should be absolutely blasting right now. So whoever got into those should be having a very, very good day. So far, we're not seeing the bullish structure at the bottom yet. So perhaps that means that we're not at the bottom yet. Perhaps that means that they really want to take out this entire range. Okay. That's kind of the I'm I don't want to say concern, but I guess that's kind of the concern of the day is that potentially that's their target. Really just push down into that lower or into the lower bounds of the 20 month on the daily time frame and really just sell from there. Um, However, at the bottom of this major range, I would still be wanting to take calls there. Okay, because again, at the bottom of very large inverse cups, we're trying to find that bullish structure. Okay, and there is bullish structure to be had here. We just have to determine which gap they're trying to take. Um, there's there was three different gaps today. There was this original one right at this range, which they decided to break down pretty early. So we then targeted the second range, which was right at this, let's see, it was like that 727 or 747.27-ish. And the next range that they're looking at is this 743.73. So if they don't start building support in here, then it's very likely they're going to try to push down entirely before they try to build support. So just be careful with trying to catch calls into here. Um, today could get very, very, very heavy with the selling. When do I take straddles during the 20 month? That's actually a very good point, and I'm super happy you brought that up right now because I would have totally forgotten to do that. So thank you for that. We're going to go over that really quick. Okay. And this is something I actually do want to get the majority of us set up into. Okay. Since we're at the daily 20 mall, there's two levels we need to hedge for. Okay. Now, we can do this multiple different ways. We can do this through TQQQ. We can do this through the actual SPY itself. We can do this through using, those SOXL or SOXS puts and calls. But what you want to do here is we say we we say to ourselves, excuse me, sorry I can't talk, that okay, we're now in the center of the road, and this is on the daily time frame. Okay, we're now at the center of the road here. We have basically, $15 above us, $15 below us. So we need to hedge those ranges because usually the market will try to aim for the breakout or breakdown. So with that, and let me go ahead and look at some of the SPY options here. So for these, I'd really ideally want to be out until about that June or that July 2nd. We see that our upper Bollinger's at 762. So let's see what a 765 is looking like. So the 765, let me write this down really quick because I want to make sure that we are properly hedging the deltas and whatnot. So 765 call for July 2nd is roughly about 352 per. And then the put side of that would be at this 730. which the put side is far more expensive. In fact, we'd have to get a contract that's a lot less of a strike to actually capture that range. However, I think that's reasonable. If we're going to start breaking down, the lower Bollinger would start pulling down with that. So this is going to be a little more difficult to hedge here. The IV on these puts are just really absurd right now. So I think I'd probably use the 710 strike for July 2nd. And that would cost you a little bit further. But I also want to look at TQQ here as well. So TQQQ, upper Bollinger is at the 78. And I want to look at the July 2nd. So this is so much more reasonable to take. So give me 1 second. Then the lower Bollinger is at the 70. Okay, so for TQQQ, this is kind of what I'm looking at, and I'm going to type them out in chat. Now you do have to buy these kind of in a 3-to-2 ratio. So the put and we would target the 88 calls for that 180 with the put side being those 70 puts for the 286. Okay. Now, granted, I understand that not everybody can take 3 calls to 2 puts in this situation. If you can only take 1 and 1, then that's what you have to do. But you want to set up these positions because ultimately we are going to either break down into that lower Bollinger or push up into the upper Bollinger. Now, this gives us roughly a whole 30 days, which is more than plenty of time. And the reason why we know that is because the 20 mile is usually tested once a month. With us testing the 20 mile today, this is telling us that technically we don't need to be back at this level for a whole 30 days, whether this is to the downside or the upside. So I really like those positions. It gives us plenty of time. Now you can also try to replicate this with, for example, like Sox S. It's going to be a little more difficult. Let me just check some of the contracts on these. So 1 second, let me look at the Sox S contracts for July. So for this, you'd be taking basically the 5 puts to hedge the upside here. So for Sox S, this would be the 5 puts, which would be essentially the call side. And then the 10 calls which would be the actual put side. So I'm going to type this out in chat as well. Yeah, Mark should definitely run in the money. Basically like almost zero doubt about that. Now those TQQQ calls that I posted earlier are for July 2nd, and the symbol TQQQ probably would have helped if I typed that out. Um, Now this one is for SOX S. And again for SOX S, the 10 calls are expecting downside within the market. The 5 puts are expecting upside. So it's a little bit backwards in terms of that thought process, but those are actually very cheap. I just had the prices on my screen. The 5 puts are about 52 per, while the 10 calls are about 40 per. Okay, so those are very reasonable to get positioned and hedged into. It was these ones right here. I'm just going to type TQQ in front of it. So that's what we're looking for the SOX S straddles, for the TQQQ straddles. The SPY straddles can work out, but they're still very pricey, and you'd have to take a pretty out of the money strike on the put side, which is, you know, a little concerning to me. Looks very likely that they're wanting to clear this level. I think out of all those straddles, um, yeah, you can. Let's see. Yeah, you do the same. So the 3 calls to the 2 puts. Um, Again, the puts are expecting upside, the calls are expecting downside for SOXs. But those are very reasonable to set up at that point. Um, you know, you could have a very, very quality straddled position for, you know, just a few $100. And that's a whole 30 days out, so plenty of time in there. Okay, everybody, if there's no final questions, then I'm going to go ahead and end the stream here. Thank you so much for watching, for supporting what I do, and dealing with me while I do have pneumonia. Excuse me, and not feeling so great. Um, but I will talk to you either in Sunday's video or during Monday morning stream. But other than that, I hope everyone has a great day. I hope most of you had a very good day. And I will talk to you when we talk next. So take care, everybody. Thank you. Have a great weekend. And again, I am starting the classes up next week, so you can check the Discord for information on that. Take care, everybody, and have a good weekend.